Today we're going to be talking about range expansion in the London trading session. We're going to be talking about the weekly high and low and how that applies to our 12 candle window. Stay tuned, traders. We'll be right back. Good day, traders. I'm Stacey Burke from Stacey Burke Trading. We're going to be doing a little bit different format in the next few videos, so I'd appreciate your feedback. Thank you again for hitting the like button. I've received a ton of emails. I know the last few weeks my videos have been sporadic. I've had a ton of activity happening with my kids' sport, school exams, as well as trading. We've had some absolutely huge moves in the British pound crosses. We've seen moves in a lot of the major instruments. Gold, we're going to be looking at gold on a regular basis. I'm going to focus on a couple of British pound pairs. We're going to be looking at setups each day and breaking them down and just analyzing them. I'm going to try and get really specific on some very simple steps. So I'm peeling back things. Received just so many emails and questions about some of the basic material, and I appreciate that. So hopefully simplifying these videos down will help people just step back and be able to identify the setups even easier. Just again, looking at how I can convey some simple concepts, and again, just focusing on the very best setups. So one of the things that I have really tried to emphasize in myself and in my own trading was to quit trying to chase moves and trade swings and little things that I often found, outside of the timings, the dead hours, the zombie hours, all these little things that I've pieced together for myself. And even when you find that you've got this method to keep yourself hopefully out of getting trapped into poor quality setups, it still requires the understanding that you just want to target the very, very best of those setups and then increase size. And instead of trying to take a lot of trades and going through stress, winning and losing, targeting some very high possibility trade setups and then increasing size as your skill set and your daily routine and your habits and your mindset start to cultivate those results. So I've done a lot of reading and a lot of research into the mindset of how they build the sniper mentality in the military, and I think there's a lot of similar overlays into trading, especially when you want to develop that specific narrowed focus on just the very best setups. There's so much information out there, people scalping, people swing trading, momentum trading, RSI trading, MACD trading, all these things, and it can be really overwhelming. And you see a lot of social media, people driving in their Lamborghinis and people living in these big, massive homes. And I don't tend to typically focus on any of that stuff. I'm just focused on trading. A lot of questions about just what pairs to trade in the US. Why do I focus on the British pound pairs? Basically, I focus on those pairs because they move, and I've studied them. I feel I know them intimately, and I think I've got a very good grasp of their behavior. And if you've been following me long enough, you've probably seen those movements occur over and over and over again. And then it's just identifying your very best trade setups and waiting for them to set up, usually specifically in the timings, either at the low of the day or the high of the day, or in some cases, as we saw yesterday on the pound New Zealand and the pound Oz, some very strong level 2 trending days. So we're going to take a look at the charts. We're going to talk about range expansion in that first few hours of the London session, but also we're going to look at just assessing the daily highs and lows and the weekly highs and lows, and as the templates move up or move down, how you can use certain indicators on price action to alert you to when they're potentially going to be reversing the market, or if in fact they're going to be continuing a move just by using the 15-minute charts. Now again, that's another question I've received. What time frames do I look at? I typically look at the daily and the 15-minute, but I also look at the 4-hour chart. So if you followed me earlier, you knew that I put up the daily levels videos with the daily 4-hour and 15-minute charts. Each week, the 4-hour chart can give us a lot of insight in terms of major number levels. But again, we'll look at that on the 15-minute chart, because when we see these weekly high-low levels broken and how to assess that as the weeks change, that can give us some huge insight into where the next day's moves may be headed, or for the next 3-day cycle in one direction. So hopefully you get some value out of today's video, traders. Thank you for hitting the subscribe button and the like button. And if you hit your notifications button, I'm going to be trying again to just each day we're going to change format a bit and just look at a couple of pairs, look how they're setting up each day, how the template's unfolding for the week, and then go ahead from there to look at how our analysis plays out in live time. Stay disciplined, stay focused. Let's look at the charts. Have a great trading session. And again, give me your feedback on the new format. Hopefully we get value from this to help traders make it simpler and more profitable and more fun. Stay disciplined, stay focused, and may the markets go with you.
Good day, traders. Stacey Burke from Stacey Burke Trading. Today we're going to just go a bit more in depth into the London session and the range expansion and how that applies to our daily highs and lows, and how those highs and lows evolve over the week with our weekly highs and lows, and how they can give us insight into potential reversals, but also each day heading into our London session where we may be headed in terms of either a trend trade or a stop hunt reversal or false break reversal trend. So again, coming back to our basic master pattern, the 3 phases, the contraction or the consolidation phase of Asia. Now, as we know, often Asia can still move 50 or more pips, and often that can happen on news, especially on the pound crosses. It may take out a previous day's high or low, but all of those are price action generating information for us as we head into our London window. So this expansion phase may happen in Asia. Out of a US-Asia rollover consolidation, we can get a range expansion that happens in Asia, or this may not happen until we get into our Europe-London 12-candle window. We may have an expansion where the market moves in 3 pushes before reversing and going to the other side, or we may have a breakout, pullback, and a stop hunt to the downside and pullback and continuation. So these are the different scenarios, but this is essentially the master pattern where we have contraction and expansion and then a trend trade. So it's important to understand each day and as the week evolves, day 1, day 2, day 3, if we have a bias where the market may be working in one direction, we're going to look at the pound Aussie and the pound each day this week. And again, just establishing the basic template and then identifying potential days or levels where that may be reversing. So if we look at our pound Aussie for this week, we have our Monday designated by the pink line. Again, if we scrunch this chart back up to look at the previous week as we head into Monday, we can see that the market after the BOE had quite a bit of volatility, and we had a low down from the BOE reversal and a high up from the high of Thursday. So when we opened up on Monday, we were inside of Friday's range, which was an inside bar. And again, we start our count, day 1. And so again, I used the daily line boxes just to represent the high and the low of our first 8 hours of the day. We have a blue dotted line representing the previous day's low and a blue dotted line on the upside representing the previous day's high. So the market trades above the double zeros, and we have a low that is still intact. But the other thing to pay attention to is that the market went up and it put a high of the day in place, and that high stayed there throughout the session. They made a lower high, and then as we went into our Europe London 12 candle window, we made a even lower high, at which point they went, and we'll just blow this up for traders. They made a 1, 2, 3, which again we've spoke about being the stop hunt pattern. And then the London bar broke down to hit the low of the day, the redrawn low of the day. We're still inside of the previous day's range, but now we also have a higher high. And the market auctions down before pulling back into the peak formation and then breaks out of the Asian range. I'll just zoom in again a bit. Now, there are two trains of thought to this. One is that some traders are trading this move down, which is fine. Obviously, there's a 50 pip move down, but also understanding that it's also a 1, 2, 3. And our timing window, again, our 3-hour high-low window, we get an inside bar at the low of the day, which is now also our low of the week. And we get the inside bar, the reverse pin hammer, and then the engulfment in the second candle just outside of the 12 candle window. So there's obviously a move down. So we have a high of the day. The market worked back into the high, came down, and then worked and did the 1, 2, 3 stop hunt into the lower peak formation, which is also a stop hunt into the lower high, breaking out of the range. So there's our first range expansion. So now we have a high of the week and we have a low of the week on this reversal. The reversal comes back up inside of the Asian range. We get our bear pin hammer stop hunting down into traders that are long. And then we get another bull pin hammer. Now, obviously, this is outside of our 12 candle window, but for traders who understand this reversal is happening, the first target they're now going to go to is the redrawn high of the day. The bull pin hammer is a 1, 2, 3. Again, the 1, 2, 3 to the high before pulling back, giving us a bull pin on top of the round numbers just prior to the US 12 candle session window. And again, you'll notice the 1, 2, 3, which is a stop hunt into the peak formation, but they don't let traders get out at the high of the day without coming back into them first. So traders short the engulfment, get caught in the stop hunt trap back into the trend. The trend is up right now. Peak formation is down below. We're making new highs, and our new target is the high of the day, which is now also the high of the week. So we have a low of the week reversal. Our first target is the high of the day. That's an important concept to understand. If they reverse off the low of the week, the first target is the high of the day. And vice versa. If we reverse off the high of the week, our first target is the low of the day. So the market then pushes through before auctioning back down inside of the Asian range with 1 push, 2 pushes, 3 pushes into the close, pulling back one more time before again hitting the new high of the day. So we now have two things, and we'll just go back. We have the Friday high. We'll just draw this line up here, which was our lower high from the previous week. But now we have that. We'll just bring this down if we can. So our high of the week is now lower. So what's important now is that we've hit the high of the previous day now. So we have possibly a peak formation reversal at the low of the week, a consolidation on top of that London range with 3 pushes, and a stop hunt to the high of Monday, which now makes a new high, higher highs. The market comes back in 1 push, 2 pushes, 3 pushes into our Europe London 12 candle window before 1, 2, 3, and then engulfing at the high of the day. So they've stop hunted into the high of the day. We've got higher lows. The market comes down 1, 2, sideways 3, blows through the low of the day, and reverses on a bullpen hammer on the last candle of the London hour. So again, the hourly rotation, this bullpen hammer reversal off of the low of the day in the last candle of the London hour makes this a 1 hour bullpen. And boom, 50 pips straight through from the low of the day, which is now also the new low of the week. It's the higher low. So the high of the day is our target. And it goes 1, 2, 3, 50 pips. Pulls back inside, which is our consolidation now just underneath of the double zeros inside the high of the day, and an engulfment outside of our 12 candle window for the stop hunt back down 1, 2, 3 inside traders who are long before consolidating, and a micro W double bottom with our middle structure, and into our 7 o'clock stop hunt hour we get the 1, 2 sideways 3. This is the 3-bar stop hunt to the high with the engulfment just prior to the US session 12 candle window. And again, our Asian range high and low, we just have a buy low and a sell high opportunity, stop hunt inside of the range, and then a stop hunt back inside of the peak formation high just prior to the 12 candle window with an engulfment off of the quarter level underneath of the double zeros, pulling back inside, and then stop hunting through the most recent low of the day and also to the low of the Asian range. Again, we get our little W middle structure at the low of the day. So we have our W at the low of the day in the US session. And again, this trade, once it's gone through to the low of the day, there's probably a low probability opportunity unless traders, I don't trade this late, but obviously traders in the northern hemisphere would potentially have been trading this into the close. We get the 1, 2, 3 back up inside of the peak formation, and then the engulfment and the consolidation. So again, in the consolidation, the market goes sideways, 1 push, 2 pushes, 3 pushes, pulls back, and then creates another little W structure heading into the Asian session. And again, we get a news related, this was the New Zealand official rate, so the Aussie obviously reflected some of that. And again, new high right through the previous day's high. So higher highs, day 1, day 2, level 2. Level 2 is our trend day. So we have 1 push, 2 pushes, and then a 1, 2, 3, and a 3-bar engulfment at the high of the day in our gap time. And the market comes down at the open of the Europe 12 candle window. And this is something, again, just range expansion. If we go back and look at the previous day, the initial burst to the downside broke the Asian low. So we range expand on the bottom, range expand on the top before pulling back inside. So we talk about the 3 things that markets do. And this is a great example of breakout, pullback, and go into a range-bound market. But this is also a textbook example of day 0. After a day 0 type day, we can look for a level 2, day 2 trend day if it breaks one of these highs or lows. So again, without even looking, I'm just going to put my range expansion tool on here. And we'll look at where this went yesterday. So we have almost 3 full expansions. We're not quite there yet. And we'll talk about that in a second. But again, the range expansion. So an example now where the Asian range has moved more than 50 pips. Well, we can expect that we're going to get a stop hunt. And when they move this market, typically prior to the Europe 12 candle window, and you're chasing a move that's already in motion, you can almost assume, you can almost assume that they are going to be doing some sort of W formation. Now I'll just see if I can write on here. And that's what happens. We get 1 push, 2 pushes, 3 pushes before the market takes off. They break the high, they pull back, and they give us another W at the high of the day. Obviously, this is on a smaller time frame, but the point that I'm just trying to identify for everybody is that these, when they make you chase back inside and it's not going anywhere, the first hour, the low of that candle, if you go and look at your 1 minute chart, you will see where they were buying off the low, buying off the low, buying off the low. And the market was not going any lower. There's our London hour right there. Breakout, pullback, continuation. High of the day, new highs, day 2, level 2. And again, even just looking at a simple range expansion of this range from high to low gives us 2 full expansions as a target. So range expansion, they expanded the range early. They broke out of the previous day's high, and you can see the blue tracer. They pull back into the previous day's high. 1 push, 2 push, 3 pushes before pulling away. But that jamming traders in that are looking for the gap to be filled and not getting that. So today, again, we see a continuation into the close and the rollover, the pin down. So the market has continued to make new highs. And at this stage, we have yet to see possibly a peak formation happening. So it's Thursday. We're up high, day 3, level 3 maybe. We could see a high of the week scenario play out for an engulfment and possibly a stop hunt back down to the low of the day. Time will tell. But just to gain it on that master template, if we came back and looked at it, again, that range expansion, we could get 3 pushes today up into a peak formation, or we may get a stop hunt back down low for the continuation, or we get a peak formation for that reversal back to the low of the day. Now I wanted to look at the pound as well, and we'll just go through. You can go through this on your own charts. We had Friday's low, and then Monday, as you notice, the Monday is making new highs throughout the entire Asian session. So the market is going up and working the high, working the high, working the high. So we have a higher low, and then in our Europe 12 candle window open, we get the 1, 2, 3. So again, the range expansion, coming back to this, we get the range expansion up top. It's inside of the range, but there's no difference. It's the same thing. We get a stop hunt high, and the market comes back inside the next target. That's the high of the week. The next target is the low of the day, the redrawn low of the day, and then the overall low of the day. And then when that level is broken and we have a possible range expansion, we can project that range now as a possible profit target when we're in this trade. Now, again, timings. First hour is the stop hunt. Second hour is the reversal, engulfment, reversal, 1, 2, 3, London open, boom. And then, of course, we talked about this the other day. We redraw our highs and lows. It's the same thing. We get a 1, 2, 3 to the high of the redrawn high of the day just prior to the U.S. session 12 candle window. We get 3 pushes, 1 push, 2 pushes, and a 1, 2 sideways 3 to the high, engulfment. A big engulfment that takes out 5 candles at least, and then measured move through the low of the day. So again, now we have a trend day on day 1. We've made new lows. The market now pulls back and stays only within a 50 pip range of the low of the previous day. So the market again goes up in Asia, makes a high. Goes up and makes a high, and then it makes a low, and it goes back up into the high. 1 push, 2 pushes, and engulfment. An engulfment with a middle structure at the high of the day is a type 2 M formation. We redraw just as we lower our highs down. We have lower high of the day now. Our target is the low of the week if we were in this trade. The market blows through the low of the week on the London Open. So again, there are traders who are waiting for the breakout to give us the trade, either the stop hunt to the high of the day for the continuation down, or the breakout and the reversal again on the 10:45 candle, the last candle of the second hour, the equities hour, for the reversal trade. Pin hammer, 1, 2, 3 to the high. Low of the week, high of the day. Pulls back inside, 1, 2, 3. And then in our rollover gap time gives us the 1, 2, 3 sideways engulfment off of 50 just prior to the 12 candle window. Okay, so a couple questions regarding this trade the other day. One is that would I take this? Absolutely. Absolutely, I would take this. As soon as I get my alarm goes off that we're at the high of the day in the gap time on a 1, 2, 3, this is a trade. My buddy and I have a nickname for this second little bull candle. We call it the Euro Great Britain trade, because years ago on the daily chart, my buddy bought that candle thinking it was going to continue through for the swing move continuation. And as you see on a daily chart, the same thing happened. And had he not had a stop loss in place, it would have completely wiped out his whole trading account. So we call that the Euro Great Britain trade. Whenever I see this, I lick my lips, especially in the 7 o'clock hour. That's the stop hunt to the high of the day for the reversal. This is going to come back at a minimum, to stop hunt this guy, who's, whenever there's a gap inside like this, and remember, we've made new lows. So this market came back to get this guy, went into consolidation. Now, if you're inside of this, the traders are up here or at break even. We know that there's a swing low where there's money sitting there. Remember, it's all about the money. They're going to hit the stops. So count the candles. 1, 2, 3, 4. Okay. 1, 2. Second candle of the middle hour. That's an open test rejection on market profile for the engulfment, continuation through the lows. And as you see, once they go through a low, you're at break even, because when these are going to go, they don't come back. Consolidation underneath the low for the 1, 2, 3 down to the low of the day. Great trading setup, but also an example, range expansion, pullback, range expansion up top, trend trade. Okay, coming back to our master pattern, range expansion, trend trade. Timings, round numbers, high and low of the day, engulfments, pin hammers, continuation. This market gave us a short trade. So if you came along in here, you want to be trading with the peak formation. Then we look at yesterday. So we have 2 days down now. It's Wednesday. Level 3, market goes sideways without pulling back, gives us a high of the day in Asia. So again, we have lower highs as we're coming down in the week. We're lowering our highs down. So do you get the understanding of trapping volume? The range narrows. In level 3, they typically will blow off in the direction of the trend. This market just bang, one candle went out of the box. This gets traders chasing the move. 1 push, 2 pushes, okay, no entry in here anywhere. 3 pushes, engulfment, pin hammer at the low of the week on a 1, 2, 3. That's called a 33 on level 3. Third day, third level down, and 1 push, 2 push, 3 pushes, engulfment, pin hammer, back through to the high of the day. This market went sideways on top of the Asian range, the lower Asian range, and then in the US session continued that move. So pin hammer on the first candle, breakout, pullback, continuation. Traders are forced to chase this. This is at first sign it's hit the high. When you're filled up near the high of the range, you have to be suspicious that you're getting caught chasing a move. So you might have took this long. You had to sit through all of this heat when the good trades are down low or up high in a high-low situation. Although this trade worked, that's a lot of stress to sit through for traders if they've had size. This is the trade that has no stress. Sideways with space, engulfment, pin hammer. It should go 1, 2, 3, bang, straight away. And then we get our M at the high of the day. to end that before pulling back into consolidation. So this is an interesting scenario today. If this was level 3, we would expect that the market may have reversed. We've taken out our lower high. This potentially could be the beginning of a level 1 situation, but we are looking like we're heading back down towards the low of the week. We could get a trade somewhere without taking out the lows, or we may continue this move down through the lows of the week for a reversal, possibly somewhere down low. Currently, the market is already moving. They're making us chase this move. So we have a high of the day in place and have yet currently, this is our most recent low of the day. And so this level, if it's broken, then we wait for the market to put a low of the day in place and either buy low or a continuation on a lower sell high setup for a measured move down in the lower direction. So hopefully you got some value from today's video, traders. The range expansion as we expand the Asian range, but also just coming back to understanding we have lower highs, and we'll just blow this up in our week. This allows us to see when the market may be running out of steam down low. So we have lower highs. The market broke that on Tuesday, but then it made lower highs again yesterday. On Wednesday, we broke out of that. We still have a lower daily high, and we have our low. So there's volume, and we're inside still. We need to wait for one of these levels to get broken or jammed in for the reversal. This could still end up being a middle structure for a reversal, but if we take out these lows, we'll either be looking for a continuation back down through the lows for a measured move, or jamming that in for the reversal back to the high of the day. Hopefully you got some value from today's video, traders. Keep it simple, stay disciplined, focus on the best setups. And again, we look at these daily line boxes. It shows us where the action is on the outside in almost every single day. Have a great trading session, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.